Should you be doing an Experian business credit check for your company? Well, in this training, we're going to talk about what lenders and credit issuers are doing with Experian business credit checks that you should know about. We're going to talk about how they're using Experian business credit checks to determine if you should be approved or denied financing. We're going to talk about how these Experian business credit checks are being used to determine what kind of interest rate you should actually pay. And we're going to talk about how lenders and credit issuers are using Experian business credit checks to determine how much money you should actually be issued in that credit card, loan, or actual credit line. We're going to talk about things you need to do to improve your business credit with Experian, how Experian's business credit scores work, and how to get the best score to get the most money. And I'm going to give you some of my best tips and tactics along the way to help you quickly and easily build your business credit with Experian to be able to get the most money at the best terms. We've got a lot to cover, so let's dive in. Experian is by far one of the most important credit reporting agencies when it comes to businesses. Now, you're obviously familiar with them in the consumer world as well. TransUnion, Equifax, Experian are the biggest players in the consumer credit space. But in the commercial credit space, Dun & Bradstreet, Equifax, and Experian are the three biggest. Now, D&B is by far the biggest credit reporting agency. They have like over 220 million business records on file. Experian comes in as the second biggest business credit reporting agency with about 20 million plus records on file. And Equifax is also popularly used in a lot of cases with banks when it comes to qualifying for loans. But if it's credit lines you want, if it's credit cards, if it's revolving credit, well, Experian is the main one used for that purpose. So you need to know about how to do Experian business credit checks on your company, how others are doing it as well, because lenders and credit issuers are using these Experian business credit checks to determine if you should be approved for credit or financing, how much money you should get, and the rates and terms you're actually going to pay. So if you're doing an Experian business credit check on your company, one of the first things you're going to see on your Experian business credit reports is a handful of credit scores. Now, the main credit scores that Experian uses include IntelliScore. And IntelliScore is the main score that credit issuers and lenders are really looking at to determine if you should be approved and how much you should be approved for. So IntelliScore basically looks at all the payment history that's supplied to Experian, and it gives you a score from 0 to 100, with 100 being the best score. Now, you want to have a 90 score or higher for the best score with Experian, but an 80 score or higher really reflects that you're paying your bills on average on time. Now, IntelliScore is about 85% comprised of your payment history, how you pay your bills. The other 15% has to do with things like the number of employees you have, the industry that you're in, utilization, amongst other things like collection. So the main thing you need to do to control all your business credit scores is get as many accounts as you can reporting to Experian and pay those as agreed. If you did that one thing, then you're going to have a good IntelliScore. Now, the other main score that you're going to see on an Experian business credit report is called the Financial Stability Risk Score. And this score literally is used to depict your likelihood of ceasing operations, going out of business, going bankrupt, closing your doors over the next 12 months. So this also takes into account your payment history, but it also looks at things like the industry that you're in, the number of employees you have, and any financial data they have. It actually helps you, if you have good tax returns, to supply those to Experian, Equifax, and D&B. That actually helps some of your scores, like this financial stability score. Now, another score that you may see on your Experian report is a blended score, a blending of your commercial and consumer credit score. Not very popular, but you will sometimes see that come up. There's also a delinquency predictor score, which is very similar to IntelliScore, but it takes into account other things like, again, deeper look into the industry you're in, a deeper look into your financial data. So when we look at IntelliScore kind of has to do with what you've done in the past. We call this a performance score. How have you performed in the past with information that Experian has about you? When we look at the delinquency predictor, is what we call a predictive score. So it takes into account what you've done in the past and other factors like collections that you have, utilization, financial data, employees, to determine what might happen in the future. And then they also, like the other reporting agencies, have a supplier score that's used to basically rate suppliers as well. So it's one of the main things you're going to notice on an Experian business credit check is your credit scores. And now you know how those work and how to control them. Now, the other thing outside of your scores you're going to notice on an Experian business credit check is the basic information about your business. It's very important because credit issuers and lenders are oftentimes pulling Experian business credit reports and comparing your application data against what's on these credit reports just to try to determine if the application they're seeing is legitimate or fraudulent. Keep in mind, 8 or 9 out of 10 applications that a bank receives are fraudulent. They're fake applications. So one of the first things that happen is lenders and credit issuers pull up your Experian credit report, they pull up your application, and they just make sure the data on there is congruent. So you want to make sure your business name, your address, your business phone number is all accurate. You want to make sure that the NAICS code or your industry code on those commercial credit reports is accurate as well. Look, if your address is wrong, then what will oftentimes happen is Experian will create a secondary credit profile for you. They'll think it's a whole new business. So making sure that your name and address is correct is very important, as long as amongst this other data as well. They'll show corporate linkage, other businesses you may be associated with. They'll have the owner's information oftentimes on there as well. And you'll also see in the summary section information about financial data that they may have, including the revenue and profits if you've submitted your tax returns. Plus, they'll have an overview summary of how you're managing your bills. Are you paying your bills on time? Are you late? They call this DBT, or days beyond terms. And if you're paying a day, 30 days, 60 days beyond terms, that will control your scores and be on your commercial credit reports as well. So those are some of the basic details that lenders and credit issuers are looking at and that you should look at as well when you're doing an Experian business credit check. And another thing that lenders and credit issuers are looking at when they do an Experian business credit check, and probably the most important thing, is to determine the likelihood that you're going to repay them. This is what lenders and credit issuers always care about most. So primarily, they're looking at your overall business credit report to determine if you should be approved or denied for credit financing based on the likelihood that you'll repay them. They're looking at those business credit scores to determine the actual interest rates and terms you should pay. And they're looking at Experian's recommendation of credit to determine how much money you should be issued. Yes, Experian, Dun & Bradstreet, Equifax, they all have a recommendation of credit on the credit reports telling lenders and credit issuers how much they think you should actually be issued. So if you want to get higher credit card approvals, higher approvals when it comes to credit lines and loans, you really need to focus on getting that recommendation of credit as high as possible. How do you do that? Well, one of the hacks that we found in helping 50,000 business owners through this business credit building process is to add as many accounts to your Experian business credit reports as possible. It's harder said than done. 97% of trade vendors don't report the credit that they give you to a business credit reporting agency, which means 97% of vendors who will issue you credit don't report that credit to Experian or Equifax. So you need to make sure that you're getting credit with credit issuers that do report, and get as many that report to Experian as you possibly can. Obviously, you need to make sure you pay those bills on time or early to give you good scores. The good scores helps you get good rates, and by adding more and more accounts, or what we call payment experiences that report to Experian, that's going to help raise that recommendation of credit and help you get higher approvals. Now, you need to make sure you're using the credit you're issued as well. Experian business credit reports have a section in each trade line that shows the recent amount of credit you're using. So it's not enough that you get approved for a $10,000 credit line. It means more if you're actually using that credit line to grow your business. The more credit issuers and lenders see that you're using the credit you're given, the higher the future approvals will be. So you want to make sure that you look at your overall business credit report. Does it reflect that you're low risk? Look at those credit scores. Make sure the credit scores are as high as possible, reflecting that you're a lower risk as possible. That's going to help you get the best terms, and make sure you're adding as many accounts to Experian and paying those as agreed. That is going to be a very important factor for helping you get approved for the high approvals that you really want to earn. So now you know what to look for on your Experian business credit reports and what to actually change, control, or improve to get the most money at the best terms. How do you get your Experian business credit reports? Well, first of all, you can go to Experian.com directly. If you go to Experian, they have a section on the website for business scores. You can easily sign up for business credit monitoring. It can cost you as much, though, as $50 to even $200 for your credit report. So if you want the cheapest way, then you can go to creditsuite.com/monitoring and get your business credit reports for only $24 with D&B, Equifax, and Experian. $250 for the credit bureaus, but you can get it for only $24 at creditsuite.com/monitoring. You can also get them for free if you actually get with us for a free business credit consultation. On a consultation call with us, we'll do a fundability assessment to figure out what you need to fix with fundability to make yourself more lendable. We'll also get your business credit reports with D&B, Equifax, Experian for free, no cost to you. Go over those with you and give you tips and tactics to build and improve your business credit. And we'll do a funding assessment. We'll tell you all the loans and credit lines you can qualify for right now. There's 3 3 ways to get that consultation. You can get it by calling us at 877-600-2487. That's 877-600-2487. You can email us info@creditsuite.com, or you can schedule online at creditsuite.com/consult. That's creditsuite.com/consult. So get with us today to get your D&B Equifax Experian Business Credit Reports at no cost. And if you got value from this training, make sure you like and subscribe and keep your eye out on our next training where we talk about more cool ways to get money to start and grow your business.